Hello there, and a very warm welcome. We're so glad you could join us for this discussion, which has been arranged by the experts over at ProTax Accountant. Today, we're diving into a topic that's, well, absolutely crucial for pretty much every homeowner in the UK, how you can sell your property without getting a nasty surprise from the tax man. So let's get right into it.
So let me just start by asking you a question. Could selling your home, the place you've made memories in, actually cost you £56,000 in tax? I know it sounds crazy, right? But believe it or not, if you're a high-rate taxpayer and you make a $200,000 profit, that number is very, very real.
Okay, take a deep breath. The good news is, for the vast majority of people, the answer to that scary question is a big, resounding no. And that's all thanks to a powerful tax shield called private residence relief. Understanding how this shield works is the key to making sure your hard-earned money stays right where it belongs, with you.
I'm really glad you're here for this essential guide. You know, the team at ProTax Accountant, they live and breathe this stuff every single day. So what we're about to do is walk you through their expert strategies to help you aim for that completely tax-free home sale.
Here's a quick look at our roadmap. First, we're going to break down that eye-watering £56,000 figure. Then we'll introduce you to your tax-free shield and what to do when life gets a bit messy. We'll cover the top mistakes people make, how you can maximize your relief, and finally, make sure you get it all right.
All right, Section 1, that $56,000 surprise. So what's this all about? It really all comes down to something called capital gains tax, or CGT. The simplest way to think about it is this. If you sell something for more than you paid for it, that's your profit, or gain, the government wants a slice of it. Now for second homes or buy-to-lets, that slice can be pretty chunky. Let's look at the actual numbers for the 2025/26 tax year, because this is really important. If you're a basic rate taxpayer, you're looking at an 18% tax on property gains. But if you're a higher rate taxpayer, that leaps up to 28%. To put that into perspective, that means for every pound of profit you make on an unprotected property, HMRC could take almost 28p. Ouch.
So that leads us nicely into Section 2 and the question everyone's thinking, how do we stop that from happening? Well, the answer is your secret weapon, your financial fortress, private residence relief, or PRR. And honestly, this is probably the single most important tax relief for UK homeowners.
So what exactly is PRR? In a nutshell, it's a special tax rule that says you don't have to pay capital gains tax when you sell your main home. The most important words there are main home. It's basically the government's way of saying, hey, we're not going to tax you on the fact that the place you live in has gone up in value.
So how do you get this full 100% tax relief? Well, you've got to tick these 5 boxes. Let's picture someone, we'll call her Alice. Alice buys a house, lives in it the entire time she owns it, never rents it out or uses it just for business. When she sells up, every single penny of profit is hers to keep. No tax. Simple as that. In a perfect world anyway.
And that brings us to Section 3. Because, let's be real, life is never as simple as Alice's story, is it? What happens when you work from home, or rent out a room, or maybe you move abroad for a bit? These everyday situations can actually put cracks in your tax shield. Stay with me here. This is where most people get caught out.
Let's take Emma, a freelance designer living in London. She turns one of her 5 rooms into a studio that she uses exclusively for her business. Now, when she sells her place, the profit on the 4 rooms she lived in is tax-free. But the gain she made on that one studio, that 20% of the property, that part could be taxable. Pro tip, that word, exclusively, is the absolute key here.
Now, another really common scenario, letting. If you have a lodger move in while you're still living there, your PRR is usually safe. But if you move out completely and rent the whole place out, that's different. Your tax relief gets paused for that rental period. And it's worth knowing, letting relief, which used to be a big help here, has been massively restricted. It now pretty much only applies if you're living in the property with your tenant. That was a huge change.
Okay, after all that complex stuff, here's some really great news. HMRC gives you a bit of a lifeline, a 9-month grace period. Basically, the last 9 months you own your home are automatically covered by PRR, even if you've already moved into your new place. This is an absolutely crucial safety net when you're juggling buying and selling.
All right, let's move on to Section 4. Now we know the rules, let's talk about the traps. These are the common mistakes that can end up costing homeowners thousands. And trust me, this is where a lot of people go wrong.
Here is a huge pro tip from the folks at ProTax Accountant, and please listen carefully. If you own 2 homes or more, you absolutely must tell HMRC which one is your main residence. This isn't just a suggestion, it's a requirement, and failing to do it is one of the easiest and most expensive mistakes you can make.
The clock starts ticking the second you get the keys to that second home. You have exactly 2 years to make that nomination. So if you bought a second place in May 2024, you have until May 2026 to tell HMRC. If you miss that deadline, they will decide for you, and you can bet their decision probably won't be the best one for your wallet.
And the pitfalls don't stop there. People often forget about long periods away from the home, keep messy records of when they lived there, or just get the maths wrong when calculating partial relief. And here's the big one. Assuming a property you inherit is automatically tax-free. It isn't, not unless you actually move in and make it your main home. The best way to avoid all this? Keep good records. Seriously.
Okay, enough doom and gloom. Let's switch gears in Section 5 and talk about how to be proactive. It's time to learn how you can use the rules to your advantage and squeeze every drop of value out of your tax relief. And honestly, the next tip might just surprise you.
So what happens if PRR doesn't quite cover all of your profit? Well, you've still got other tools in your toolbox. Did you know that for the 2025/26 tax year, every person gets a capital gains annual exemption of £6,000? That alone can wipe out a small tax bill. You can also deduct costs like your stamp duty and estate agent fees. And for couples, if you own the property jointly, you can both use your exemptions, shielding up to £12,000 of your profit from tax.
We have covered a huge amount of ground, so in our final section, let's boil it all down to the absolute essentials. Let's create a simple checklist for getting your tax right.
So here are the golden rules to remember. 1. Your main home sale is usually tax-free. 2. Watch out for exclusive business use or renting the place out. 3. If you own more than one home, you must make that nomination. 4. Remember that 9-month grace period. It's a gift. And finally, keep great records. They are your absolute best friend in all of this.
Look, as we've seen, this can all get pretty complicated, but the good news is you don't have to go it alone. When things get complex, getting expert advice isn't a luxury, it's a necessity. The team at ProTax Accountant is always ready to help. You can get in touch with them directly on WhatsApp or give them a call on 07985 689912 or just drop them an email at info@protaxaccountant.co.uk.
And for more fantastic, simple-to-understand tax guides just like this one, make sure you hit that subscribe button on the ProTax Accountant YouTube channel. It's an amazing resource for getting on top of your finances. So, I'll leave you with one final thought to mull over. Is your property sale really as tax efficient as it could be? Thank you so much for joining me for this essential guide from ProTax Accountant.